Hello, good afternoon. I hope everybody is doing well. I'm live again today. We are going to talk about life insurance because this is something we all must know. It's important to understand life insurance because your life insurance gives your family choices by providing the benefits that can help them pay off some debts, that can help them meet with housing payments later in life, in maintaining their expenses and different financial situations that can come up after you're gone. So, investing for life insurance can be a great idea. Considering this, we have today an insurance advisor, Asha Sharma, with us, and she's going to share with us some facts related to life insurance and different types of life insurance that we can have. So, hello, Asha. Nice to have you with me today.
Good afternoon, everyone. Good afternoon, Nousheen. Thanks a lot for having me again here, rather.
How is your day going?
Busy?
Busy as usual?
Busy as no, busier than before, actually, honestly, because somewhere I'm feeling, yeah, it's a good idea to work from home, but I don't know. I'm working like 24/7. Earlier, I used to work maybe 8 to 9 hours. That 8 to 9 hours has increased to 12 to 14 hours now. So,
It's
yeah,
happening
but
with many of us because sometimes unexpected calls come and we are just you cannot decline a call if somebody needs an advice and they want to talk to you about something. So it's like you really need to pick up your phone and answer it even if it's like 10 p.m. So
that's
yeah,
right.
but the thing is that all of us, like people, even our clients, should understand that yeah, we are all at home and working from home, but there has to be some discipline. Anyways, coming to the life insurance point. So Asha, tell us about it. What really life insurance is, and why should we have it?
See, yeah, you know what? These days, since like last our conversation, also I stated that people are really very confused. Most of the
Yeah.
time, people are asking me very simple questions, which are very straightforward. But then I understand that it's life insurance or any sort of insurance. It's itself is a very complex subject. So, there are
Yeah.
many things which, when people take the life insurance, any sort of insurance, they do not go through the terms and conditions. And these days,
Okay.
people have time to go through it. So they're asking many questions. And this pandemic has, it's an a pandemic has created very unusual and uncertain times. So,
Hmm.
people's questions are very valid. So, your question, what is life insurance? See, life insurance in simple terms is a contract. It's between insurer and policyholder, in which
Okay.
insurer guarantees death benefit payment upon the death of the insured to his or her chosen beneficiaries. Okay, see, life insurance is a risk management. Now, what is risk management? If we go by definition, risk management is the process of identifying, assessing, and controlling threats to an organization capital and earnings. Now, similarly relate to one's life. Life insurance is a
Hmm.
product which provides a risk management in one's life. While designing any life insurance product, what we do, we identify the need first, and then we assess it, and then measures or solutions or products are offered. Okay. And these products, basically what these products do, they transfer the risk from the families who cannot afford it to the insurance companies who can afford it. So, very
Hmm.
simple terms, life insurance is hedge to risk, basically. That's why
This is
insurance is known
this
as
is
risk management. Yeah.
this is a very good explanation. Like the risk transfers from the person to the insurance company.
To the
I never.
insurance company. Yes. Yeah. See, like car insurance, what we do basically. Yeah. Why do we take the car insurance, motor insurance, vehicle insurance, or in Dubai? You remember recent there was a fire breakout in what's that area? Al Nahda area in Sharjah. Yeah, basically.
Yes.
So these home content insurance, basically what you are doing, you are managing your risk. You are transferring risk
Hmm.
because you cannot
Hmm.
afford it to someone who can afford it. We transfer the risk
Yeah.
from person's life to the insurance company. So that is what the insurance is.
Okay. There are how many different types of insurances in life, let's say
Ah,
for life insurance?
okay, life insurance, there are many different types of life insurances. Okay, worldwide, yes, there are many, but I'll tell you two
The
different
ones
type
from here.
insurances today. Yeah, I'll tell you two. It's one is term life insurance and one is whole of life insurance. Now, first, let
Okay.
me explain you what is term insurance. Term insurance tagline is high coverage at affordable premiums. Okay, term is insurance coverage for a specific amount of time, specific amount of period. It could be 10 years, it could be 5 years, it could be 30, 35, or whatever the maximum a carrier will allow you. Different companies provide you different terms. So you need to see that. Yeah. If you
Okay.
or your spouse who is insured under term insurance passes away at any time during this term, your beneficiaries whom you have selected to inherit your money will receive the payment. Okay. So that's
Okay.
basically term. You relate it with your term, right? The word term says that it has a specified term. Now let me jump to the second one. Then I will explain you again the what is in more detail. I'll tell you what is term. See, second is whole of life. Whole of life coverage lasts throughout your entire lifetime. Yeah, this means you never have to worry about uninsurability or losing your safety net as you get older. Now,
Yeah.
whole of life insurance is investment like product coupled with insurance policy. It also works as a forced saving vehicle. Okay, so that's the difference between term and a whole of life insurance policy.
Okay.
Okay, so
Yeah.
now going to term insurance. Now let me explain you what is term insurance. Okay, 100% of the premiums you pay are used to cover the cost of the insurance.
Okay. Right. Asha, we cannot hear you. Can you repeat, please? There is a lot of disruption in the stream from Asha's side. Hello, Asha. Are you still with me? Hello, Asha. Um, yeah, Asha is explaining to us term in whole of life insurance. I'm still waiting for her to get back because there is some disruption in the line from her side, in the stream, I mean. Yeah. Okay. As Asha has said previously, your life insurance is actually a way of investing in risk management. And you shift the risk from yourself to the insurance company that can help you manage your debts and your financial issues later on, especially when you're gone and your family has some debts to manage. So, yes, Asha, I can hear you now.
Okay, coming back. Okay, so see where we were. I was explaining what is a term insurance. Okay, I'll
Yeah.
start from there only. 100% of the premiums you pay are used to cover the cost of the insurance. Yeah,
Okay.
no surrender value is occurred. A term insure plan will not acquire any paid up value. So that's the definition of term insurance. Now, many people ask, is term insurance is just one term insurance? No, there are many kinds of term insurances. Like
Okay.
level premium term insurance is there. Yeah. Now, I'll just go through one by one. Okay. What is level premium term insurance? Where
Hmm.
the premiums are payable throughout the selected term for prefixed sum assured. Like suppose, Nousheen, you are covered for $300,000 for the next 30 years, and your premium is say $100 a month. So it means for the next 30 years you will remain covered for USD $300,000, and for next 30 years you will continue paying $100 a month. So that's known
Okay.
as level. Next is convertible term insurance. Convertible term insurance is anytime you can convert your term insurance into whole of life insurance. Mhm.
Right.
And next comes the term insurance with return of premiums. There are some, this kind of insurance which has return of premium are available in some countries. What does it mean? That after some time, whatever you have paid, if you don't demise, not all the money, but some of the money insurance company will revert to you.
Yeah.
And then next comes the term insurance with guaranteed renewal. This is very important one. Term
Okay.
insurance with guaranteed renewal. Right now, I'll explain you with an example. If a 30 years young and healthy person goes for a term insurance with guaranteed renewal for the next 10 years. So what does it mean? At the age of 40, if he wants to renew it, he can renew it without undergoing any medical underwriting. But
Okay.
again, it depends on company to company. But there are some companies who provide this guaranteed renewal. You don't have to go for medical underwriting, and it will be renewed again whenever you want, actually, basically, whatever is your term when it finishes. And then is decreasing term insurance. Decreasing term insurance is basically we use for mortgage of a personal loan. Again, let me explain you with example.
Sure.
Suppose you have a mortgage of say $3 million. So obviously
Mm-hmm.
what will happen, as you continue paying, the amount outstanding will keep decreasing. Yeah. So the life cover which is attached to this sort of mortgage, your life cover will also keep decreasing. So that is very much attached to your amount outstanding. And then is term insurance with riders. When I say these riders add value to the plain term insurance, but you have to pay extra premium. Yeah. Then is e-term insurance. E-term insurance is, you see, these days there are lots of insurances, term insurances available on digital platforms, but I'm somehow not very comfortable with those, because they have many terms and conditions which generally
Okay.
people do not read. They just go for it that it's very economical, it's not very expensive. But be careful, you need to read the fine prints which are applicable at the time of claim, basically. So
Okay.
e-term insurance is good, but don't forget to read the fine prints. So these were the different types of term insurances.
Okay. You mentioned, Asha, the riders for term insurance. What are they?
Yeah, see, term insurance riders are add-on benefits or amendments attached to your basic term insurance plan. I'll give you with example. See, with riders, one can customize the plan according to their needs. Riders could be waiver of premium. It
Okay.
could be critical illness or terminal illness. It could be accidental death, permanent or partial disability. Like, let me explain you one by one. Say waiver of premium. What does it mean? Waiver of premium is, suppose you have a term of 20 years, and after and you have a rider, a waiver of premium attached to it after 5 or 6 years, because of some disability or because of critical illness or because of some illness, if you're not able to pay the premium, in that case the insurer will waive your premium. Will waive your premium means you are not supposed to pay those premiums. Insurer will pay those premiums on your behalf. So
Okay.
basically you can customize your term insurance with these riders.
All right.
Riders could be, like I just said, terminal illness, critical illness, or um, disability. That could be permanent or partial.
Interesting. So
Mhm.
they can add more value and bring more ease to the people who are buying a policy, right?
Yes. That's right. It's an add-on benefits basically, or amendments which are attached to your term insurance.
Yeah. So while you were talking, Asha, you mentioned critical illness and you also mentioned terminal illness. Are they the same?
I knew that this question is coming. Because many people get confused with critical illness and terminal illness.
Yeah.
Okay, very important to understand. See, terminal illness benefits pays out a lump sum amount to the policy holder if they are diagnosed with an end stage illness. Now, listen to the words end stage illness and are expected to die within 12 months, or it could be 24 months. See, again, terminal illness, it's again the word is terminal. It means something is going to terminate in near future. Some companies might give you 12 months, some companies might offer you 24 months. So it's an end
Okay.
stage illness, yeah. The benefit provides cover for unforeseen disease which is not curable. So that's terminal. Now coming to the critical illness could be terminal illness if someone has what we say third or fourth stage cancer, or the last stage. I don't know the exact terminology. It could be terminal, right? But
Yeah.
critical illness shouldn't have to be a terminal only. A heart attack is critical illness. A cancer which is very much curable these days. Medicine has advanced so much, so
Yeah. It
it could be curable. But that's the difference between terminal and critical illnesses. Terminal illness has a time span, which is basically end stage illness. That's known as terminal. Critical could be heart attack, stroke, Alzheimer's, Parkinson's. There is always a list. Critical illness you will find always listed in insurance company. Different insurance companies offer different critical illnesses.
okay. So it varies from one company
It
to
varies from company to company. Yes, that's right.
yeah. So a person needs to understand where are the more benefits, and it's good to consult somebody who knows everything and has been with different companies to make a decision. This is what I believe, right?
Very much right. It's very good to get advice from independent financial advisor, because what happens, independent financial advisors are not working with one company. They have in their portfolio many companies, you see. So
Yeah.
they study different policies from different companies.
Okay. All right. Great. So what happens like if somebody's traveling and they're not in the same country from where they bought the policy? Do you think that
Mhm.
they are still covered?
You mean to say, see, someone has a bought policy in Dubai, UAE, and he
Yeah.
is traveling to, say, UK. Yeah, UK. Suppose he's in UK and the person dies in UK. Will
Hmm.
his beneficiaries will get the benefit, right? Payout.
Yeah.
Answer is yes. Again, but when you are taking a policy in that policy schedule, there are some countries always mentioned. It could be war countries, it could be some unsafe countries. Um, so those countries will always be mentioned. And while doing the application, if you travel a lot, yeah, then you need to
Yeah.
fill travel questionnaire will go to your carrier or to the insurer where you want to have your insurance. So then the underwriter will analyze the risk. Suppose you are traveling to any war country a lot, then your life cover could be loaded, or your life cover, they might reject it. They might tell you, see, you travel to these countries a lot, so we don't want to take this risk. So they might reject
Okay.
insurer, or they might load it. So it's very important to fill the travel. If you travel a lot, to especially to the countries, unsafe countries, let's put it like that. If you travel a lot to unsafe countries, so it's always advisable to be very open, very
Yeah.
honest with insurance companies, and fill the travel questionnaires. So yes, answer to your question is yes, but terms and conditions are attached there.
Good. So, what are the different things that we should consider when we are choosing a life insurance plan? Like, what could be the best terms, and how do we find those best terms?
Good question. See, important factors are first insurance company's rating. Very important to check from which insurance company you are buying. Check their rating. More important than that is check the claim settlement ratio. Means, what does it mean? Insurance companies, how many claims they have settled in the last 12 months, 24 months, how many critical illnesses they have. Generally, they publish it. So it's very important to go through the claim settlement ratio. That will give you confidence. That will tell you about the company, how they are settling their claim, how often they are settling the claims. And there are some companies who do not publish their claim settlement ratios. Yeah. And next is
Yes.
very important to compare terms and conditions. Why terms and conditions? Because it should fit your needs. Like one shoe doesn't fit all. So different companies offer different options. So you need to go through the fine prints or terms and conditions. And then next is very important to understand how much cover you need. Everyone's requirement is different. Everyone's need is different. So it's very important to calculate how much cover you need, and then calculate factor of inflation in that. And again, previously also I say, do not go for lower premiums. Term plan, as they may have several conditions attached to it. If you see the lower premium, so I mean to say, read the fine prints, reads the conditions which are attached for the time of claim.
Okay.
So it's important to go through the terms and conditions. Yeah.
So a good policy might not be a cheap one. That's what you're saying.
Yes, that's right.
All
You
right.
don't need to dig a hole in your pocket to buy insurance, but it's very important that it's economical. Okay, it's very cheap. It's just available. No, it's not
No,
like
Asha,
that. You need to see the
that
conditions which are attached.
these are very different times. Nobody has extra money at the time, right? And we all want to make sure that our families are in a good situation, let's say from 10 years or 5 years from now, or at any period of time that we have not foreseen. So this is the reason I said that if we are going for a cheaper one, how do we decide that it's the right one? If we are going for an expensive one, how do we understand that this is the right one for us?
It's not expensive or cheaper one or economical one. It's the terms and conditions at the time of the claim. That's important to read.
Yeah. Okay. A lot of people are commenting about the economical situation, and some of them are also mentioning that who will go for an life insurance policy in these times when nobody has extra money. So coming to the fact, if you already have a policy and you feel that the premiums are difficult to pay, so you might have missed a few. So Asha, in a condition where people are not able to pay the premium regularly, what will happen? What happens to the
Yeah.
policy? What happens to terms and conditions? Does it lapse?
Here is what is people saying, that people doesn't have money, who will go for the insurance policy. Right? This is exactly what is happening right now. See, money will come and go. Family needs will never be coming in. Your family will always be there. Your financial liabilities will always be there. That will always be there, whether we have money or whether we don't have money. Okay, now answering your question, if you miss a premium, then there is a chance that my policy will go lapse. See, if you have existing policy, first thing is to check status of your policy with your agent or through your insurance company. Each company has a grace period. When I say grace period, what does it mean is that some companies, if you don't pay for 90 days, yeah, if companies terms and conditions says that grace period is 90 days and you haven't paid for 90 days, god forbid you demise in those 90 days, insurance company will still honor the claim. So that's basically grace period of 90 days. So you always have grace period. Some companies will offer you 30 days grace period, some will offer you 60 days, some will offer you 90 days. So yes, missing the premium doesn't mean that your policy will go lapse and insurance company won't honor. No, that's not the truth. Only thing is that you need to check with the insurance company about the grace period.
Right. Interesting. So it means that it doesn't go lapse if you have missed one or two premiums.
No, it doesn't. You should have some grace period in your policy, and you need to check how much grace period in your policy there is, because
So I
right now,
want to
yeah, sorry.
yeah, I want to understand how much
Sorry.
of life cover should one go for? Like,
Yeah.
what should I opt for? How much should be covered? How many
See,
years?
thumb rule states that you should have a minimum of life insurance cover of 10 times your annual income, okay, or
Mhm.
sufficient to meet future living expenses and
Oh.
value of financial goals after accounting for inflation. See,
Mhm.
let me tell you in this way, everyone should make their balance sheets in life. We so many people, we see the balance sheets of the companies. Each and every
Mhm.
person should have balance sheet. So now
Yeah.
how do we do it? First of all, identify the need. Yeah. How much financial liquidity or resources your dependents need if you meet untimely death. And for
Mhm.
that, you have to take some steps. Like first, estimate your monthly expenses, including inflation. Then add
Mhm.
any liability if you have, like mortgage. If your mortgage is not attached to life cover or credit card bill or any personal loan, and then add your financial goals. When I say financial goals, if you have two kids at home, obviously those kids will go to university, their higher education, their weddings, then that is one of the financial goals. And then how much your spouse needs once the kids are out of the nest, or that's basically known as retirement fund. Now, when you calculate this on a piece of paper, you will come to, this will give you estimate idea total how much life cover you need. So your life cover amount will be decided by the balance sheet which you create for your life. That is
Mhm.
basically how much your family needs in the future. So you need to
This is
write step by step.
this is very interesting, Asha. I never thought of it this way. I was presented two policies and I just got one. Okay.
No, it's not.
Without thinking
Always you need
about
to
the cover.
identify it. Like, initially I said, what is insurance? Insurance is a risk management. So when we say risk management, what do you do in risk management? You identify, you assess, and then, right? So while taking an insurance policy also, first identify you need, and then assess it, then choose a product. And for that,
Oh.
you need to make balance sheet, which I told you, go step by step. And then, very important is determine the tenure. It shouldn't be too less. It shouldn't be too long. It shouldn't.
Hmm.
Why I'm saying it shouldn't be too less, so that your family shouldn't be left in between. And why I'm saying it shouldn't be too long, because longer the term insurance policies, more expensive it is. A
Okay.
30-year term insurance policy will have higher premium than a 10 years term insurance policy.
Okay. All right. All right.
Yeah. So see, if insurance you are taking not to pass your not to write a kind of legacy, if insurance is just a tool, God forbid if something happens, your family shouldn't come in sort of a financial troubles,
Situation.
or yes, in sort of a situation which is not which is not very pleasant. So in that case, it's very important to decide the tenure, how much you need.
Okay. Great. So, what is whole of life insurance?
Okay.
Remember, we talked
So
about this in the beginning of our conversation when you said that there is term insurance and there is whole of life insurance.
whole of
So,
life.
tell me more
Yeah.
about now whole of life insurance.
Yes. See, whole of life is whole of life insurance policy. It's guaranteed to remain in force for the insured's entire lifetime, provided required premiums are paid. Now, whole of life insurance policy has two components. These two, first component is cost of the insurance, which insurer will charge you, and second component is saving component. Saving component means this money will be invested, the saving part, I mean to say, that will be invested in stocks and bonds. So it has two components, whole of life, and it is supposed to be remain force for the insured's entire lifetime. Premiums are much higher than term insurance policies. Hypothetically, term insurance policies are the cheaper one, and whole of life insurance policies are the most expensive. But what happens in whole of life? Premiums are locked in at the age of inception. Then it doesn't increase at all unless and until you increase your life cover or you add other riders in between. You
Hmm.
pay in the premium every month, and upon that benefit, you are paid out like I said earlier. I'll give you, so that's the basic of the whole of life, but I'll give you reasons why people go for life insurance. Yeah. So whole of life insurance is more expensive than term insurance. Still, people go for whole of life. Because see, whole of main reason people take out whole of life insurance is to help cut their family's tax bills, particularly the inheritance bills. So we know in UK there is always a inheritance bill. As far as I know, this is 40%. If your assets net worth is more than 325,000 pounds, I'll just add here, it keeps changing. Okay. So right now, if your assets are worth more than 325,000 pounds, then IHT at 40% will be charged on all your assets. So people take a whole of life insurance policy. So that 40%, the beneficiaries who are going to inherit your assets, they don't have to pay from their pocket it won't go from the, I mean to say that 40% X, they won't pay from their pocket. Rather, they will get it from insurance company and they will pay it to the tax. They will pay in a form of tax and they will inherit all the assets. So that is the one people go for whole of life insurance policies. And second is if you advantages is medical underwriting. When you take a whole of life insurance policy, say you are insured for $5 million at the age of 35, 36, or whatever it is. So you are medically underwritten only once. At the age of 45, if you have cancer, you have critical illness, terminal illness, whatever it is, your premium won't be increased because you are medically underwritten for that benefit at the time of the inception. But still here, I want to add something. Insurance companies do have right to review the premiums which you pay. So it could be increased, but mostly insurance companies do not do that. And another benefit of whole of life insurance, estate planning, which again includes inheritance. And then it's like writing a legacy. Many well-off people, wealthy people, they go for whole of life insurance policy because someone at one point, someone is going to inherit their assets, whatever they have accumulated, gold, diamonds, homes, or whatever. So just to add on, they take large sum assured policies. It could be $5 million, $10 million, or $50 million. So yes, it's a kind of legacy which you write for your beneficiaries. So that is what the whole of life insurance policy is.
Good information, Asha. Too many facts.
Yes. It's a complex subject, actually, you know.
Yeah,
So
it is.
yeah,
So I
insurance
want to know
itself
why
is an
is it
industry.
expensive? Why
Sorry?
life insurance? Why whole of life insurance is more expensive?
Whole of life insurance is more expensive. See, I'll tell you in technical way, I'll answer you this question. See, insurers underwriters determine what they will charge for policies by analyzing risk, right? Yeah, medical underwriters, financial underwriters, they are going to analyze the risk. The higher the risk, the more expensive the policy will be. Now, whole term life insurance policy covers one till the age of 90, 95, or 100. So what does it mean? It means insured will die during that term. So insurance company has to pay the money. Yeah. So now coming to the term life insurance policy, there is less risk involved. Since the insurance companies will not necessarily pay out death benefit during the shorter policy period. Let me give an example. Like suppose Asha has two policies, term insurance, which is for 10 years. Yeah. And Asha has one whole of life insurance policy. Term insurance policy will be cheaper. Whole of life insurance will be expensive. Reason being, whole of life will cover Asha till the age of 95, 96, 100, whatever it is. So insurance companies know that Asha is going to die before 100, so we have to pay this money. Now, the term insurance policy, which Asha has taken for the next 10 years, there is, unlikely that Asha, it might happen, she might die, but unlikely that she'll survive next 10 years. Yeah. So that's the difference. Here is the risk again. Whole of life has to be paid, term, not necessarily. You never know. So that's the difference. Basically, it's underwriters' way of analyzing the risk.
Right, I understand that. Great. So should we get the term insurance or whole of life insurance? Which one do you recommend?
Okay, two schools of thoughts are there. I'll give you both, yeah, and then I will give you my opinion. See, one school of thought says that because whole of life policy is expensive, so go for the term insurance. Suppose in whole of life you are paying $1,000 a month. In term insurance you will pay $100 a month. So with $100 you can buy a term insurance policy. Not a term insurance policy. Basically, you buy a peace of mind for your family. It gives a peace of mind when you sleep at night. God forbid something happens, at least my family is taken care financially, right? So if you are paying $100, you are still left with $900. That $900 you can invest. You can invest in index funds, you can invest in ETFs, whatever you want, you can invest it there to grow your wealth, basically. So this is one
Yeah.
school of thought. Second school of thought is that whole of life is better than term because it's because of the medical underwriting, basically. You do not run out of insurance throughout your life. You are never at the risk of uninsurability. Even at the age of 85, 90, when no one is going to offer you insurance, you are already covered. So,
Yeah.
but my opinion, see, how I advise to my people is go for both. If you want to leave a legacy for your family, whole of life. But if you cannot afford whole of life, then take a term insurance policy, but always supplement it with whole of life, or take a whole of life and then supplement it with term insurance. Term insurance is till your kids are in your nest, till your kids are not ready to stretch their wings and fly out, basically. So your financial, they need financial liquidity till that time. So till that time, whatever your balance sheet, as I suggested, says, get that with term insurance. But to later on to cover your spouse during retirement years, during old age, or you want to leave a legacy for your kids, then write yourself a whole of life insurance policy also. So supplement. So this is my opinion. This is how I advise my
This
people.
is an expert's opinion.
This is an expert's opinion indeed.
Yes. All right, Asha, thank you so much for your time. You have definitely shared very useful information with us today. And let's cover up something different next time so that more people can benefit from the knowledge that you have.
Sure. I would like to discover the topic of critical illness because people, again,
Okay.
are very confused, basically. How critical illness rider can help, what it is, which company offers what. So I think that could be a good idea. And thank you very much, everyone. Thank you
Thank
very
you
much
so
for
much.
tuning.
And thank you guys for joining us today to listen to all the facts that we collected for your benefit. And we look forward to seeing Asha again. Thank you, Asha. Take care. Have a good day.
Thank you. Everyone stay safe, stay home. Bye bye.